Welcome back to our morning crypto update. So, you might have heard that Bitcoin's price rose about 20% in April. But what does that really mean for investors? CryptoQuant, a leading analytics platform, recently released a report suggesting that the surge was largely driven by speculative perpetual futures demand, rather than actual spot demand. In other words, people were betting on the price going up, not actually buying and holding Bitcoin. And here's the thing: even though the price went up, the actual amount of Bitcoin being held in spot exchanges didn't budge. That's a pretty big red flag for investors. According to CryptoQuant, this means that we might be due for a correction soon. Now, I know what you're thinking. What does this mean for me as an investor? Well, if you were one of the people who bought into Bitcoin at its peak in April, you might want to consider selling some of your holdings and taking profits. And if you're still holding on to Bitcoin from last year's price surge, you might want to think about selling it now while you can get a good price. Remember, when spot demand is weak, it's usually a sign that the market is due for a correction. So, what do you need to watch out for? Keep an eye on your portfolio and be prepared to sell if the price starts going down. And most importantly, always keep in mind, don't get caught up in speculation. Make informed investment decisions based on actual data. If you found this helpful, subscribe to Bill Crypto USA and hit the notification bell so you never miss an update.